get deeper into Box's recent results, I want to welcome CEO and co-founder Aaron Levie.
Oh, that's not the best chart to show at all time. Can we change the chart?
Look,
okay.
The last couple of days have been better, but
yes.
There's concern about the competition.
Yeah.
There's always been concern about Dropbox,
yeah.
but decelerating growth.
Yeah.
What do you have to say about that?
Yeah, a couple of things. So I'll try and kind of clarify as much as possible. So Q4 itself, the quarter we just came off of, was by all accounts very strong. So we did 136.7 million in revenue. Analyst estimates were at exactly that number, and that was the range that we guided to. We did a couple hundred million, over 200 million in billings, over 13 million in free cash flow. So really strong quarter overall, and it was sort of really what Box looks like when we're executing at our best, serving some of the largest customers on the planet, insurance agencies and companies, major banks, government agencies. So we did over 78 deals over $100,000 and 9 deals over $1 million. What ended up happening was we guided to a decelerated rate for FY19, the year we're in right now, and certainly that was lower than analyst expectations, hence the pressure on the stock. And really the reason for this is we are transitioning from a single product company to a multi-product company, and as we are doing that, the way that we're selling is to serve bigger customers and bigger deals, and we wanted to make sure that we set ourselves up for a really good foundation for the year that would have some levers for accelerated growth either later this year or especially next year. So we're still on our path to $1 billion in revenue over the next few years, but we did want to make sure that we were a little bit more conservative in how we were guiding.
Now, I know you've been asked about Dropbox many times over the years, including by yours truly.
Yeah, thank you.
Now that you've seen the numbers and they have filed to go public, are you concerned about the competition?
I don't think the numbers or the S1 sort of changes are the competitiveness of the business. So we've generally kind of known at a high level how they were performing. I think Dropbox's numbers are sort of a tale of two types of companies. One is a consumer revenue business, and that's about 60 or 70% of their revenue. That's end users or consumers like you and I using it for either professional or personal use cases. And then about a third of the revenue is B2B. And so that is probably the only part of the business that looks anything like Box. And that tilts much more to small business or teams, whereas our revenue tilts toward mid-sized companies and large enterprises.
And why couldn't they go after the large enterprises?
Well, I think that they've, in some cases, been trying over the past 5 or 10 years, and I think they've ended up tilting their focus back to where they're really, really good on the consumer SMB side. And our companies over time have evolved to look very different. So the kind of sales force you need, the kind of consultants you need, professional services, the level of security, compliance, and regulatory controls you have to build into the platform end up looking like a very different company at scale. So the thing that our 1,800 employees do every single day looks very different than what Dropbox's employees do. Even though maybe in name we are similar, or we both store, let you share files, the General Electrics of the world or the Eli Lillys of the world end up needing a different type of functionality, and that's what we've largely focused on in the past decade.
You've got a couple of years on them as a public company. Any advice for Drew Houston?
I generally don't give that much advice to pseudo competitors, but I think the more that we can obviously both be as clear as possible in our two businesses, the better. I think this is going to put a massive spotlight on this industry. I think that's good for both of us. We're collectively going after a $40 to $50 billion market, so there's no shortage of addressable market for both of us to go and tackle. And so we're, again, focusing more on enterprises. They're focusing more on consumers and SMBs, and I think there's plenty of market for both of our businesses.
Now that Box is cash flow positive, you said you're going to start investing more. Where? Are there any features out there or companies that you might like to acquire? Yeah,
so I'm not going to be able to announce any kind of corp dev moves today, but
why not?
Sorry, it just IR and PR and corp dev and honestly the SEC, they all have problems with this. So someday we'll be able to get there. But we are very focused on certainly our organic growth and our organic investment in R&D. We do tuck-in acquisitions here and there to accelerate our roadmap. But the best way to think about our roadmap is if you are a 50,000 person company or a 100,000 person company and you're transforming how your business works or operates in the digital age, maybe you're a bank, maybe you're a life sciences company, maybe you're a government, we want to be the backbone for how you're managing, securing, and working with your information. So we have a lot of products that deal with bringing more intelligence into Box and AI into Box, a lot of solutions that go deeper into security or compliance to be able to better serve our customers. So these tend to be the focus areas for the business right now.
Bloomberg has just confirmed that Gary Cohn is leaving his post at the White House.
Breaking news.
Obviously, was a COO of Goldman Sachs. This has been speculated for a while now. You've been a very outspoken opponent of the Trump administration. What do you make of this in the context of, in general, where we are more than a year into this administration? Like, are we better or worse off than you thought we would be?
I honestly, we are so off the path of where I could even imagine. Because generally we tend to think linearly about these things, and this has just been very nonlinear. So I think the Gary resignation would just lead to more, internal chaos that I think we've already been seeing. So incredibly hard to know how I would compare, where we are today versus where you could have been, thinking a year ago or whatever. But in general, it's not good to see that lack of stability and maybe steady hands of some of the people that he was surrounded by.
Do you think it'll hurt business?
I have no idea. I mean, I think that businesses and the market probably appreciated having somebody with Gary Cohn's background and maybe political sort of views involved in the administration. Very pro-trade, very sort of oriented toward a growth economy, and so I think that this could put some risk from the policies, and that's really what matters a lot with these types of roles is who is advising the president, and then ultimately what are the policies that we see enacted, and I think having somebody like Gary out of the system, and not advising Trump is I can't imagine is a positive thing.